In November 2025, the boat market flipped overnight. More than 4 million used boats hit the listings, crashing prices and drowning dealers in debt. Auctions overflowed, banks called in loans, and storage yards filled to the brim. What started as a pandemic boom just turned into a panic-driven liquidation. From Florida to Michigan, prices are collapsing faster than anyone imagined. This isn't a correction. It's a reckoning. The question now isn't if the market sinks deeper, it's who survives when it does. And you need to make sure you are, so keep watching. The November shock. It hit like a rogue wave. In early November 2025, dealers across the country began unloading boats faster than they could photograph them. More than 4 million units. From barely used pontoons to $200,000 cabin cruisers, flooded listing sites within days. On boats.com and BoatTrader, pages that once showed 20 listings now scrolled endlessly, packed with markdown tags in red. One broker in Florida admitted on camera, "We're pricing to survive, not to profit." That was not marketing talk. It was distress. Proof was everywhere. A 2023 Beneteau GT that held firm at $289,000 in July now sat unsold at $231,900. A Skeeter base boat that brought $75,000 last summer struggled to fetch $58,000. Used boat values were dropping between 15 and 25% inside a single month, the steepest fall in a decade. For owners, that meant lost equity. The question echoing through marinas became simple. If supply was this tight last year, how did we get flooded overnight? To see the answer, you have to rewind to when the surge began. The pandemic years that built this wave long before anyone saw it coming. The pandemic pipeline. Back in 2020 and 2021, when travel shut down and stimulus checks flowed, boat sales exploded. Freedom on water replaced vacations in the air. Dealers took deposits faster than factories could build hulls. Production at Brunswick, Yamaha, and Malibu ran double shifts. Interest rates hovered near 3%, so anyone with a pulse and a dream could finance. That frenzy filled order books for 2 straight years. What no one asked was what happens when those finance dreams return to shore. By 2023, fuel costs climbed, slip fees doubled, and insurance renewals bit hard. The same buyers who stretched 10-year loans now faced inflation-era budgets. Boats that once symbolized freedom turned into floating bills. Meanwhile, manufacturers, still ramped for boom time demand, kept cranking out inventory. The market didn't cool. It overbuilt. Cheap money had created expensive regret. By the start of 2025, tens of thousands of vessels sat in holding lots, financed on dealer credit lines, waiting for buyers who never came. And when the money tightened, the floor under those boats vanished, starting with the dealers who financed the whole illusion. If you've already seen prices falling where you live, drop a comment below. Your story maps this crash in real time. Dealer debt trap. Every dealer lives on borrowed time and borrowed cash, known as floor plan credit. In good years, lenders front the cost of each boat, and dealers repay once the sale clears. But when interest jumped from 4 to 9% between 2023 and 2025, that credit line became a noose. Each unsold vessel now costs hundreds of dollars per day just to sit under the showroom lights. For a mid-sized store holding 40 boats, that's thousands in daily interest before a single sale. Internal memos from 2 regional banks show why panic set in. One branch in Texas reduced marine credit limits by 40% to overnight, citing inventory exposure risk. Another demanded dealers make cash curtailments, partial paydowns, every 30 days or lose funding. Dealers who once bragged about full lots started hiding boats off-site to lower inventory counts. Sales staff whispered about layoffs. The math was merciless. Either sell below cost or face repossession. And as those loans tightened, the math that propped up the boom began to crumble against reality. The number of boats already floating in the system. Registrations versus reality. On paper, America looks like a nation of boat lovers, with roughly 11 to 12 million registered recreational vessels. But that count hides a dangerous imbalance. Storage yards from Michigan to Florida are full, stacked 3 deep, many holding boats that haven't seen water in a year. Drone footage from marina auctions shows lines of shrink-wrapped hulls stretching past the fence line. Dealers can't move them. Private owners can't insure them affordably. And lenders won't extend new credit with so much collateral idle. That oversupply has secondary consequences. Storage fees, once a reliable business, are starting to tumble as operators compete for too many boats and too few paying owners. Insurance companies, seeing rising losses from storm damage and declining values, are trimming coverage and hiking deductibles. For the average owner, that means paying more to protect something worth less every month. What began as a boom in leisure has turned into a liquidity trap floating at every dock. And just as factories slowed, the panic didn't stop there. It moved downstream, straight into the auction lanes where the real prices are decided next. Auction Truth Serum. Step into any regional marine auction this month and you can see the truth flickering under fluorescent lights. Rows of nearly new boats sit polished but unwanted, tagged with reserve prices that keep slipping lower. One auctioneer at Mannheim Marine said last week's clearance rate dropped below 60%, a sign of pure oversupply. Hammer logs from boats.com confirm what dealers refuse to say out loud. A 2023 Sea Ray that sold for $270,000 last spring now struggles to break $190,000. In this market, the spreadsheet tells no lies. Every gavel strike reveals the real market long before the retail listings catch up. Dealers pretending prices are holding steady are working off stale numbers. The proof is right there in open bidding, where buyers hesitate even at half of last year's sticker. For cautious shoppers, this is the best early warning system. Auctions don't lie because sellers can't fake demand. And while those auction lights expose falling prices, another convoy is already forming on the highways. Flatbeds hauling away what owners can't keep. Repo convoy. Across the country, tow trucks are working overtime. Rising interest rates, jumping from 5% in 2023 to nearly 11% by mid-2025, have pushed many borrowers underwater. When payments stop, the banks don't wait. They recover the collateral. Lenders from Tennessee to California report marine loan delinquencies doubling in a single quarter. Each repossessed hull becomes one more body in the supply flood. What makes this round different is speed. Automated tracking allows banks to locate and seize boats within days of a missed payment. The repos roll straight into storage lots, bypassing dealers entirely, and head for wholesale auctions at fire sale prices. Cash buyers are quietly circling those sales, ready to strike when lenders slash minimum bids. It's why the smart money waits. While finance buyers fight for approval, the man with cash writes his own terms. But not every boat showing up on those lots is what it seems. Some have already lived a harder life than the paperwork admits. Zombie boat. They shine under showroom lights, smell like polish, and carry clean-looking titles. But some of these boats are already dead. Across Florida, Louisiana, and the Carolinas, thousands of flood-damaged vessels have been tidal washed, meaning their salvage history was erased when transferred across state lines. In one salvage yard in Alabama, more than 800 storm boats were processed in late 2024, many now reappearing online with fresh paint and no disclosure. The hull identification number tells the truth if you check it, but most buyers never do. Insurance data shows the pattern clearly. Claims from hurricane losses have spiked by 30%, yet the number of officially branded salvage titles barely moved. That means many of those damaged boats are being flipped into the retail market as used but clean. Behind the glossy gel coat lurk corroded wiring, soaked foam, and hidden mold that will cost thousands to repair. Before you buy, run the HIN through federal databases and insist on moisture tests. 1 hour of caution can save 10 years of regret. Even if the title is honest, another danger still hides in plain sight. The price math that can fool almost anyone. Price physics. Here's where most buyers lose money. Misunderstanding how retail and wholesale values diverge when markets fall. Dealers like to anchor you to last year's sticker. But data from J.D. Power and Black Book tells a harder truth. A 2023 Regal that listed for $129,995 now clears auctions around $101,000. That $28,000 gap is not a discount. It's depreciation catching up in one brutal swing. Emotion makes people overpay. Math protects them. Before walking into any negotiation, find the current hammer prices for identical models. Subtract reconditioning costs and factor in transport or storage. That's your ceiling, not the number on the windshield. Dealers know most shoppers fear losing the deal. That fear is their margin. In falling markets, patience beats persuasion. The numbers prove it every week. And now imagine that same math multiplied by 4 million boats. The scale that turns a correction into a reckoning when the next part of this story unfolds. The 4 million equation. Industry reports showed a projected 4 million used boats entering circulation, nearly 5 times the normal flow of 858,000 pre-owned sales per year. The sources read like a perfect storm. Repossessions from rising loan defaults, trade-ins from owners desperate to offload fuel-heavy cruisers, defleets from rental operators cutting losses, and estate sales triggered by higher upkeep costs. Each stream fed into the same ocean of oversupply, flooding the market from every direction. Charts from the National Marine Manufacturers Association show the curve steepening since March. Not gradual, but vertical. Once inventory climbs past what buyers can absorb, price drops start compounding, like interest in reverse. The lower the values fall, the more sellers panic and join the race to the bottom. Buyers watching this from the shoreline can see it clearly. The industry isn't correcting, it's surrendering to math. And on the front lines of that surrender, dealers are making brutal choices just to stay alive. Dealer triage. Inside dealership inboxes, the subject lines tell the story. Immediate clearance opportunity. Aged inventory adjustment. Bulk broker pricing. These aren't sales pitches. They're survival signals. Small-town dealers who once bragged about sold-out seasons now email wholesalers, offering bundles of 5 or 10 boats at cost just to clear floor plan debt. Internal memos from 2 Midwest networks confirm it. Aged inventory allowances are expiring, and lenders are tightening every week. In plain terms, that means dealers must pay cash on boats older than 90 days, or lose credit lines altogether. For some, that's a death sentence. You can see it on their lots. Lights dimmed, banners fading, staff hours cut back. Yet for cash-ready buyers, this is the moment leverage shifts. Dealers who once refused to negotiate are now asking what it would take to move a unit today. When fear meets liquidity, prices bend fast. But while dealers slash prices to survive, households on the buying side are tightening their own belts even harder. Before the next price wave hits, hit subscribe. Every update here keeps your wallet ahead of the market's next move. Household freeze. The same interest rate shock that crushed dealers also froze buyers in place. A year ago, marine loans hovered near 6%. By mid-2025, many lenders quoted 11%. For a $50,000 loan, that difference adds nearly $150 a month, enough to make families walk away from what used to be affordable fun. Rate sheets from 2 major banks confirm the jump. Approvals are stricter, terms shorter, and down payments higher. The result is a stalemate. Dealers need movement. Buyers can't justify it. This freeze deepens the discount spiral. Boats that might have sold quickly last spring now linger for months, forcing further markdowns. Smart shoppers understand what that means. Patience beats panic. Every week a boat sits. The carrying cost eats the seller's profit. By waiting until post-season, when storage fees loom and credit renewals hit, buyers can save 20% or more. In this cycle, doing nothing for 30 days is the smartest financial move you can make. And if you time that patience right, you'll hit one of the two windows that define real buying power. Timing window. Every downturn has its rhythm. And in boating, it always revolves around two windows. The first arrives in late winter, just before new model year shipments, when dealers quietly liquidate last year's stock to shrink loan exposure. The second opens in early autumn, right now, when the season ends and storage bills come due. Historical clearance curves show September as the reset point. Retail prices drop fastest, and the largest discounts appear between mid-September and late October. Miss it, and you'll face spring premiums once optimism returns. Track auction clearance rates. Follow freight movement, and watch how listings age. When identical boats start reappearing at lower asks every few days, you've entered the window. Move carefully but decisively. Inspect, verify, and close before winter shipping slows supply. September is the month the market resets. It's not hype, it's history repeating itself. Next, we'll map where those real bargains hide. The regions and dealers most likely to crack first. Hot zones and safe harbors. If you follow the freight, you'll find the truth. The steepest discounts aren't where the advertisements scream. Mega sale. They're where transport trucks keep rolling empty on the return trip. Florida, Texas, and the Great Lakes region are now the epicenters of the price collapse. Freight tracking reports show boats leaving those states at double the normal pace. Yet only half are finding new buyers. Dealers near the Gulf Coast and Central Florida marinas are slashing inventory just to avoid paying another month of storage. In some lots, boats that once listed for $90,000 now appear at $65,000. Priced for transport, meaning the seller wants the freight company paid before the lender calls. Proof of the regional cracks shows up in dealer ads. When you see delivery assistance included or port clearance, you're looking at desperation, not generosity. Follow the freight lanes, not the billboards. Where the trucks cluster, prices fall first. But even in those hot zones, how you pay decides whether you win the deal or feed the problem. Cash versus credit. Right now, money itself has strategy. Dealers depend on financing kickbacks from lenders, often a full percentage point on every approved loan. That's why a buyer flashing cash too early loses power. A leaked dealer invoice from a Texas showroom shows the truth. A $20,000 sale with financing earns a $200 loan origination bonus. No financing, no bonus. So, when you announce cash at the start, the dealer sees profit disappearing. The smarter move is silence. Let them calculate the financing margin first, then reveal cash when the price has bottomed out. Timing is leverage. Speak last, not first. When you hold liquidity in a tightening market, you control the clock. If a seller knows you can close immediately, but only at your number, they're forced to weigh interest costs against pride. 9 times out of 10, they fold. The result is simple arithmetic. Silence saves thousands. And once you've won on price, the real protection starts. In the inspection bay, before any money moves. Inspection protocol. A great deal is worthless if the boat itself hides rot. Before signing anything, demand verification, not promises. Start with the hull identification number. It must match the title exactly, letter by letter. Next, run a moisture meter along transom seams, hatches, and bulkheads. Hidden water damage can destroy a hull from the inside long before it's visible. A compression test on every engine cylinder tells you if the motor is healthy or merely cleaned up for sale. A skilled mechanic can finish these checks in 50 minutes, and that short session can save you 5 years of repair bills. One customer in Michigan skipped the inspection and found delamination within 3 months. Repair estimate, $24,000. A buyer 2 slips down paid $200 for a pre-purchase check and walked away from the same model. Inspection isn't paranoia. It's insurance you control. Because even with all the caution in the world, this story isn't finished. The next wave is already forming beyond the docks. After the fall, step back from the marinas and look at the bigger picture. The industry itself is shifting. Small dealers are being absorbed by regional chains, and manufacturers are merging to survive. When consolidation begins, it means pricing power is moving away from the individual seller toward the few groups that remain. But before that control locks in, a final opportunity opens. November is when the next repo surge hits. The same loans that defaulted in summer reach the liquidation stage. Analysts expect another 100,000 units to appear at auction within 3 weeks. The market isn't slowing, it's unraveling. Prices are collapsing, repos are surging, and dealers are dumping boats at any cost. What looked like a buyer's paradise is really a survival zone. Every sale, every auction, every discount tells the same story. The big reckoning is here. If you want to stay ahead of it, not sink with it, subscribe now. I'll show you how to protect your money, spot the traps, and find opportunity while everyone else panics. This storm doesn't wait for anyone. Hit subscribe and stay in control before the next wave hits.